Good afternoon. I'm Dr. Fasasi Kazim Adiola. This afternoon, we'll be looking at books of accounts. What are books of accounts? The books in which businesses used to keep accounting records on day-to-day business transaction. We're going to say books of accounts. Books of accounts is defined as books used to record day-to-day business transaction. These are books we use to keep accounting records on day to day. And what are the classification of these books? Classification of books of accounts. Books of accounts are classified into two. One, we have what we call the principal book of accounts. And two, we have what we call the subsidiary book of accounts. These are the two books of accounts we have: the principal book of accounts and the subsidiary book of accounts. We'll be looking at these two books in details so that you students can understand in depth of principal book of accounts and also subsidiary book of accounts. Let's start with principal book of accounts. Let's start with principal book of accounts. Principal book of accounts is defined as book of accounts used to record transaction permanently. It is used to record transaction permanently. And the example of this principal book is a ledger. Ledger is a practical example of principal book of accounts. In our previous video, we have talked a lot about ledger, but we are looking at ledger in details as principal book of what? Account. And that's why we will raise a question. And what's that question is, what is a ledger? A ledger is a principal book of accounts used to record transaction permanently. It is also used to classify accounts. It is where transactions are recorded permanently. Why do we say this? Let's look at the accounting process. From the source document, the next you record is the subsidiary book. From the subsidiary book, you keep the record in the ledger. If you look at it, the first book in which you keep accounting transactions is the subsidiary book, just for record purpose. Where you classify the account is in the ledger. After ledger, we don't have any other books of accounts. That is why we said it is a book where transactions are recorded permanently. Meaning, after ledger, there's no any other book. Some people may say, no, after ledger, there's trial balance. Trial balance is not a book. Trial balance is just an extract to show the accuracy of the ledger. But ledger is a book where the transactions are recorded permanently. The next thing is this. If you look at it, we said it is used to classified accounts. In that case, what are the classification of ledger? What are the classification of ledger? That's what we are looking next. We are going to classify the ledger with the aid of diagram and explain it. We are going to classify the ledger. Want to look at classification of ledger using diagram. Ledger is classified into two. One, ledger is classified into personal ledger and also in personal ledger. Those are the two classifications of ledger. And personal ledger is classified into two. We have accounts payable. I also have what we call accounts receivable. What do you mean by account payable? Account payable means creditors. And what do you mean by account payable? Account payable means debtors. Meaning personal ledger is used to record individual accounts such as AG, like Shegun account. If Shegun happens to be a creditor, or like Gimba account, if Gimba happens to be, meaning account that has to do with the name of a person. Either the person is a supplier that supplied goods on credit, that person will be recorded as a account payable, and that is under personal ledger. Or if that person happens to be a customer that goods have been sold to on credit, that person will be classified in accounting as account what? Receivable. That's Gimba account. This is because we no longer use creditors again. Instead of using creditor, what we use now is account payable. And instead of using debtor, what we use now is account receivable. Now let's go to impersonal ledger. Impersonal means is impersonating. An impersonal ledger is classified into two. Under impersonal ledger, we have what we call real account, and we have what we call nominal account. When we say real accounts are accounts that has to do with tangible assets. What are real accounts? E.g., example of a real account. A real account can be furniture. Furniture is an asset. A real account can be land and building. A real account can be plant and machinery. All tangible assets are classified as a real account. But when we say nominal account can be categorized into two. We have expenses and we have income. So a beginner, what are expenses? Expenses are purchases, rent. All these are what? Expenses. What are income? Income are sales, discount receive, rent receive. All these are example of income. Now, both expenses and income, accountant classify them as a nominal account, while real accounts are classified as a tangible asset. In that case, ledger are classified into two by this diagram: personal ledger, and personal ledger has to do with account of individual that happens to be a creditor, which is account payable, or a debtor, which is account receivable. That's why you see me giving example of name. Now, when we say in personal ledger, we're talking about real account and nominal account. Example of real account are item of tangible asset such as furniture, land and building, and plant and machinery. One example of a nominal account are classified into two. When we say nominal account, we are referring to either expenses or what? Income. Expenses in accounting are purchases, rent, rate, stationery, repair, motor expenses, motor repair, machinery expenses. uh, while in income, we have sales. Sales is an income, discount receive, rent receive, and interest receive. This is all about the principal book of account. Principal book are ledger. Ledger are where transactions are being recorded permanently, and ledger are used for classification. I would say we have two classification of ledger. We have the personal ledger and we have the impersonal ledger. Personal ledger is classified into two, such as account payable and account receivable, while impersonal ledger two is classified into two, as real account and nominal account. From this, we'll be heading to the second book of account, which is very important to this lecture, and that is the subsidiary book. Now, we'll be looking at the second book of accounts, which we know as the subsidiary book. Now, when we say subsidiary book can be defined. Subsidiary book can be defined as book of original entry where transactions are first recorded. That is definition of subsidiary book. It's a book of original entry where transactions are first recorded. Let's see whether that's true. Let's look at this from the source document. The first place you keep accounting record is the subsidiary book. From the subsidiary book, you pass the entries to ledger, and it is from ledger you extract to trial balance. That's the process. That's what we said is a book of original entry. Why? It is this subsidiary book that takes entry from the source document, which is our receipt, our invoice, our debit note, our credit note. These are the source documents. Any item written on the receipt, the first place the entries or the record inside the receipt, the first place you are going to record it is the subsidiary book. That's what we said is the book that takes the original figure. That's where the word original entry comes from. That's what, if there's an error later, the first place we are going to check is the source what? Document. And the next place we are going to check is the subsidiary book. Because all record in the source document are first recorded in the subsidiary book. It is after you record the subsidiary book, you take it to the ledger. And once it gets to ledger, that's the permanent book. To check the accuracy of what you record in the subsidiary book and what was recorded in the ledger, the accuracy will be checked through the trial balance. In that case, subsidiary book is book of original entry where transactions are first recorded. Now, what are the classification of subsidiary book? Classification of subsidiary book. Now, subsidiary book are classified as follows. One, we have the purchases day book, or students, you can also call it purchases journal. Two, we have the sales day book, or you can also call it sales journal. Three, we have what we call purchases return book, or we call it return outward journal. Also, we have the sales day book. Sorry, we have the sales return book or return inward journal. 5, we have the cash book. 6, we have the petty cash book. And lastly, we have what we call general journal. These are the 7 subsidiary books. We are going to look at each of them in details in terms of calculation. What are they used for? Let's summarize all the book. Purchases day book is a book that it is being used when goods are bought on credit. When you bought goods from your supplier on credit, the appropriate subsidiary book to record such transaction is purchases day book. It is used for goods bought on credit. The sales day book. The sales day book is also a subsidiary book used when goods are sold to customers on credit. When goods are sold to customer on credit, the appropriate subsidiary book is the sales day book. When goods are returned back to the supplier as a result of damage, or the goods is not in good condition and you are returning the goods back to your supplier, you have to keep such record in purchases return book, or we call it return outward journal. Likewise, number 4, if customer return goods back to your business, the appropriate book to keep such record is known as sales return book or return inward journal. Number 5, all cash transactions in your organization are kept in the cash book. And the cash book is categorized into 3. We have the single column cash book when transaction involve cash only. We have the 2 column cash book when transaction involve cash and bank transaction. And we have the 3 column cash book when transaction involve cash, bank, and discounts. Those are the 3 categories of cash book under cash book: the single column, the 3 column, and the 2 column cash book. When we now say petty cash book is a type of cash book that is being used to record all minor expenses according to organization policy. It's only organization that can determine which part of their expenses should be treated as minor expenses. But all minor expenses are treated under the petty cash book. Why? Any transactions that cannot be fit into purchase day book, sales day book, purchase return, sales return, cash book, petty cash book are now recorded under the general journal. In our coming videos, we'll be looking at calculation on each of these subsidiary books in details with a simplified illustration. Thanks for watching. We thanks all our viewers for all our videos that you have been following. We know that you are following it for the sake of knowledge and sometimes for the sake of writing exam. And we wish you best of luck in any exam you are using these topics to write. Don't forget to subscribe to this channel. Thank you.